Welcome to Money Minds. How much do you think you need to retire comfortably? Did you know that American adults believe they need $1.46 million to retire comfortably? This figure is not just a rough estimate, it's a calculated sum that has been steadily increasing over the years. It rose by 15% just from last year and has seen a massive 53% jump from what Americans reported in the year 2020. That's a significant leap, don't you think? Now you might be wondering, are these increases in line with inflation? Well, the answer is no. The rise in this perceived retirement nest egg has outpaced the growth in inflation, which currently hovers between 2 and 3%, according to Northwestern Mutual's 2024 Planning and Progress study. So, what's causing this drastic increase? Well, it appears that Americans are recalibrating their expectations for retirement. The so-called magic number for a comfortable retirement has been on a steady climb. It's a figure that is shaped by a multitude of factors, including the cost of living, expected lifespan, and the desire for a certain lifestyle post-retirement. In the year 2020, Americans reported a magic number of $951,000. Fast forward to today, and that number has ballooned to $1.46 million. That's a $500,000 increase in just 5 years. So what does this mean for you? It means that planning for retirement is becoming more complex and requires thoughtful consideration. It's not just about saving, it's about understanding how much you'll need and making a plan to get there. And remember, this is the average figure reported by American adults. Your magic number might be different, depending on your personal circumstances and goals. In just a span of 5 years, the magic number has jumped from the $951,000 target Americans reported in 2020. So, what's your magic number? How are you planning to reach it? Stick around as we delve deeper into the realities of retirement planning in the upcoming scenes. Different generations have different expectations for retirement. Do you want to know what they are? This question is key as we delve into the generational differences in retirement expectations and planning. Let's start with Generation Z and Millennials. These younger generations are looking at quite a steep hill to climb. They expect to need more than $1.6 million to retire comfortably. That's a number that may seem daunting, especially when compared to the just under $1 million target Americans reported only 5 years ago. High net worth individuals, those with more than $1 million in investable assets, have an even higher bar set. They believe they'll need nearly $4 million for a comfortable retirement. That's almost 3 times the average expectation. As we look at when each generation starts to save for retirement, we see another interesting trend. The average American starts saving for retirement at age 31, but for Generation Z, they're getting a head start, beginning to save nearly a decade earlier at age 22. This is a full 15 years ahead of the baby boomers and older generations who report starting their retirement savings at age 37. Millennials and Generation Xers aren't far behind, beginning their retirement savings journey at ages 27 and 31, respectively. But when do these generations expect to retire? Generation Z, despite their early start, aim to retire at age 60, giving them a long potential retirement period to fund. Meanwhile, baby boomers and older generations expect to work until they're 72, significantly extending their working years compared to younger generations. As we see, different generations have different expectations and strategies for retirement. Each generation faces its own unique challenges and opportunities in planning for their future. But one thing is clear, the earlier one starts saving, the better positioned they are to meet their retirement goals. Interestingly, Gen Z aims to retire at age 60, while boomers and older generations expect to work until they're 72. This difference in retirement age expectations is just one of the many factors that shape the landscape of retirement planning across generations. Opening. While the required amount for a comfortable retirement is increasing, the actual savings of U.S. adults is decreasing. A noticeable trend is that as the magic number for retirement soars, the average amount that U.S. adults have saved for retirement is on a downward slope. The numbers from Northwestern Mutual's Planning and Progress study for the year 2024 show a modest drop in retirement savings from the previous year. The average amount saved for retirement was $88,400, a slight dip from the $89,300 figured in the year 2023. But this decline becomes more significant when we look back 5 years. In 2021, the average amount saved for retirement had reached a 5-year peak at $98,800. That's more than $10,000 above the current average. Now let's put this into perspective. The magic number to retire comfortably, according to American adults, is $1.46 million. That's a staggering increase of 53% from what Americans reported in 2020. Yet the average savings is dropping. This growing disparity is the reality of savings today. Aditi Javeri Gokhale, a chief strategy officer at Northwestern Mutual, once made an apt comparison. In 2023, the soaring cost of eggs in the grocery store symbolized inflation in America. In 2024, it's nest eggs. The cost of a comfortable retirement is inflating beyond reach, while the savings to achieve it are dwindling. This isn't just a matter of numbers, it's about people's dreams and their future comfort. It's about the gap between what we aspire to and what we are achieving. It's about the reality of savings, a reality that is becoming increasingly challenging. And so we find ourselves in a situation where the magic number for a comfortable retirement has exploded to an all-time high, while the average savings are falling. The gap between retirement goals and progress has never been wider. Closing. The gap between retirement goals and progress has never been wider. Do you think you will be financially ready for retirement? You might be surprised by how many people don't. Let's delve into the reality of financial preparedness across generations and the looming specter of outliving one's savings. A stark reality sets in when we consider the confidence levels among adults about their readiness for retirement. For instance, less than half of boomers and older generations, only 49%, believe they will be financially prepared for retirement. The picture isn't much brighter for Generation X, with only 48% expressing confidence in their financial readiness for their golden years. The story of unpreparedness doesn't end there. It extends to the fear of outliving one's savings. Generation X, for example, believes there is a 42% chance they could outlive their savings. That's nearly half of this generation grappling with the worry of financial insecurity in their later years. Boomers and older generations aren't far behind, estimating the probability of outliving their savings at 37%. That's more than a third of these generations confronting the same fear. It's a sobering reminder of the importance of financial preparedness and the risks that lie ahead for those who may not have planned adequately. What's even more concerning is that across both generations, more than a third have not taken any steps to address the possibility of outliving their savings. It's a startling statistic, indicative of a gap between the understanding of financial preparedness and the actions taken to ensure it. The question then arises, why is there such a gap? Could it be a lack of financial literacy? Or perhaps it's the daunting task of navigating the complex world of retirement planning. Whatever the reasons, it underscores the need for more robust financial education and planning resources. As we continue to navigate the complexities of retirement planning, it's essential to remember that it's never too late to start. Whether you're a boomer, a member of Generation X, or a millennial, there's always an opportunity to take steps towards financial preparedness. More than a third of both Gen X and boomers have not taken any steps to address the possibility of outliving their savings. Let's aim to change that narrative one step at a time. Retirement planning is changing in America. Do you want to know how? It's an exciting shift, mirroring the evolving dynamics of our society. The younger generation, particularly Generation Z, is leading the charge in redefining what retirement means. This new wave of financial planning sees Gen Z starting to save for retirement at an average age of 22. That's nearly a decade earlier than the average American and a full 15 years earlier than their baby boomer grandparents. It's a remarkable change that highlights the shifting financial awareness among the younger generation. Gen Z's early start in retirement planning is not just about accumulating wealth. It's about redefining the idea of retirement itself. They're not just working towards a cessation of work, they're planning for a fulfilling and enriched post-career life. And they're not just dreaming about it, they're putting their money where their aspirations are. For Gen Z, retirement doesn't mean bidding farewell to productivity or engagement. In fact, they plan to retire at 60, a full 5 years earlier than the current average retirement age. But retirement for them isn't about stopping, it's about starting something new. It's about exploring passions, pursuing hobbies, and contributing to society in meaningful ways. It's about a life filled with experiences and activities that bring joy and fulfillment, not just rest and relaxation. This shift is not just optimistic, it's strategic. By starting early, Gen Z is giving their investments more time to grow, harnessing the power of compounding to build a substantial nest egg. They're not just saving, they're investing. understanding that the key to a comfortable retirement is not just about how much you save, but how wisely you invest. The new retirement paradigm is about more than just financial planning. It's about life planning. It's about envisioning the kind of life you want to lead post-retirement and then working backward to make that vision a reality. The good news is that the younger generations are investing earlier so they can save the money they need to enjoy a long and fulfilling post-career life. Because, after all, retirement is not the end. It's the beginning of a whole new chapter. In the wake of the new retirement paradigm, it's essential to not just focus on the financial aspect of retirement, but also to envision the kind of life you want to lead post-retirement. Are you someone who wants to travel the world, or are you planning to start a new venture that you've always been passionate about? Or maybe, you want to dedicate your time to a charitable cause close to your heart. The possibilities are endless, and they are all up to you. It is not just about having enough savings to live comfortably, but also about having a purpose that drives you every day. This approach to retirement planning is not just practical, it's fulfilling. It allows you to work towards a life that is not just comfortable but also meaningful. It's about making your golden years truly golden. So start thinking about the lifestyle you want to lead when you retire. Then calculate the amount you need to save to fund that lifestyle. Remember, the earlier you start, the easier it will be to achieve your retirement goals. And with the right financial planning, you can make your retirement dreams a reality. So, what are you waiting for? Start planning for your retirement today and make the most of your post-career life.